Do you want to 10x your account in 1 month? Who are we kidding? There's no such BS on this channel. If you want to grow your small account in 2020, here are 3 tips to follow. Firstly, you have to build good trading habits. Secondly, you have to trade what you see and not what you think. And thirdly, you need to reflect on your past mistakes and successes. From my experience trading the markets, these 3 tips really helped me implement trading strategies and kept my portfolio alive. And I know what you're thinking. These tips seem to be kind of common sense, but trust me, they are way more difficult to implement than it actually seems. In fact, there are entire books dedicated to just these aspects of trading. If you find trading to be rather complicated and overwhelming at the start, you are not alone. The internet is filled with strategies and showing buys, usually pitched by confident and well-dressed people who seem to be authoritative and subject matter experts.
Hey, hey, hey! So,
The good news is, we have all been there. I myself have been suckered into implementing strategies pitched by so-called experts and encouraged to buy assets that will moon and make me a millionaire. Sometimes it can be really difficult to separate the truth from the BS, especially for someone who's just entering the market. Blindly following strategies without understanding them is just as dangerous to your Lambo dreams as taking a 100 times leverage trade and then praying that in the next 10 seconds it will all work out. If you have been on YouTube or the internet long enough, you would have come across this concept called hodl. Have you tried the hodl strategy and hodl a 300% gain to a 99% loss? Trust me, I'm still feeling the pain from that one. I have been to Rectal multiple times, so believe me when I say it is more important to understand charting tools than finding the perfect strategy. This video will be useful for beginners who want to get a grasp on how to start trading. It will also help advanced traders looking for tips to improve their trading performance. This video might even help those Lambo gurus because you don't want to turn your Lambos into Hot Wheels. Today I will go into the intricacies and challenges of implementing these 3 trading essentials that might at first seem like common sense. Before you ask, today I'm not going to trade a $500 account from scratch because I do not have an $8,000 cost to sell. Well, at least not yet. In all seriousness, if you want to start the year fresh and start trading your small account in 2020, then hit the like button to have a profitable new year. For the first tip, we cannot operate efficiently in a dynamic environment without something concrete to hold on to. By building good habits, it gives us structure and a footing to navigate the chaotic nature of trading on and off screen. What do you mean by on and off screen, you might ask? Well, trading is not only affected by what you do on the screen. Charting, technical analysis forms only 10% of trading, in my opinion. Many times, your trading outcome and decision making will be affected by what you do off screen. These are activities such as setting aside perhaps 1 hour per day to review your ongoing trades so that you don't forget about them. Can you imagine if you let a trade run for 4 days without looking at them, only to realize that they have mooned 50% previously and now you are in a 5% loss? Ouch. By doing daily reviews, you are not out of sync with the market, and this prevents you from encountering panic-inducing moments in trading where you're forced to make fight or flight decisions. Other good off-screen habits to adopt is to record your trades as detailed as possible. You can jot down details such as why you enter the trade, the technical indicators that you use, for how long did you hold the trade, and the final outcome of that trade. I myself use a trade template like this to help with decision making and to analyze my trading activities. Now going back to on-screen good habits, these are habits that have to do with good charting practices. Did you do a proper chart analysis before deciding on a take profit level or stop loss level? Or did you just eyeball it? Meh, I think 30% would do. Were there actually sufficient reasons to enter the trade? How about limiting the number of positions you take at a time or the size of your position? The points that I mentioned above are on-screen good habits that can really affect the overall trading performance. Sometimes big green and red candles on the screen can trigger intense emotions, which causes us to throw caution and logic into the wind. When that happens, people start chasing markets and start panic buying or panic selling. By having the good habit of doing a comprehensive chart analysis, we avoid the mistake of doing guesswork and twitching into a trade. And this good practice should also extend to when we exit trades. That is why I think it is always good to do a comprehensive chart analysis to get a feel of the bigger picture before we commit to a trade. Have you got a method of recording your trades? How long do you spend each day to review your charts? Do you have a problem with being consistent with good habits? Chances are you and I have faced similar experiences. So let me know in the comment section below and I'll try to share some of my experiences regarding those questions. Not as a showing trader, guru, but as a down-to-earth trader trying to make money moves. Right now, some of you might be wondering, when are you going to divulge your number one trading strategy? Well, besides liking and subscribing to this channel, there is no such thing as a number one strategy. Okay, let's be real here. There's actually no such thing as the best trading strategy. So in my opinion, if there is a number one best strategy, it would be the trader him or herself, because it's ultimately the trader that implements all the trading strategies, techniques and tools that he or she comes across. Technical indicators are just tools, and trading systems are rigid constructs operating in a chaotic environment. They will still need to be adjusted, tweaked and adapted to the current trend and market conditions for it to work. This comes to the second tip. Trade what you see and not what you think. I believe there are times when you thought, BB Kings, this has got to be the bottom. I can just feel it. Let me just go long with 50 times leverage, okay? Then this happens. Sometimes it is not the lack of charting knowledge that causes us to make mistakes. More often than not, it is because of our emotions that we fall into traps. We cannot impose our will on the market, and it is best to trade based on logic. And this still holds true despite the fact that the chat rooms and forums are posting ever bullish news. One of the fundamental concepts of technical analysis is that the market discounts everything. The market would have reacted to all factors and the price will reflect the outcome of the news. Personally, I will set price targets at support and resistance levels. I will only enter a trade if there is a convergence of 3 or more technical indicators. In layman terms, that would mean I need at least 3 reasons to enter a trade. For example, these reasons could be price holding a key support level, which is further confirmed by a positive divergence of the momentum indicator and a bullish candlestick reversal pattern. The only exception to this would be a wick fishing strategy, which is kind of a high risk, high reward strategy. I will cover wick fishing in another video, but as mentioned, wick fishing is a high risk strategy. If a trader has not yet developed self-discipline in cutting losses and position sizing, implementation of this strategy could lead to some devastating losses, so be warned. It makes me cringe every time I hear those advertisements for the trading systems that will automatically generate income for you, usually delivered by a guy standing in front of his Lambo in his garage. Trading is a lot of hard work. The market is always in flux, and as traders, I believe we should be diligent in improving our skills, monitoring market movements, and adapting our strategy. But credit where credit is due, those get-rich-quick Lambo systems are not a complete wash. Before I tried the system, I could only afford a sock. Now I have a pair. Coming back to the topic of trading what you see and not what you think, I find the book Market Mind Games to be a very good read in understanding trading psychology. And for beginners trying to get a feel of the market, I recommend Technical Analysis of the Financial Markets because it covers a wide range of trading subtopics. For this channel, I'll be creating videos on the different technical indicators that I personally use, so stay tuned for that. For the last tip in this video, we should always reflect on past mistakes and successes. If we want to grow our small account, I believe it is essential to reduce mistakes while replicating past successes. If you cannot increase profits, then by reducing losses, you will still be able to increase your net gain. Alternatively, cap your losses to a certain amount by setting stop losses and start increasing profits to increase your net gain. The best case scenario, of course, would be to increase profits while reducing losses, but that is easier said than done. I generally look back at my trade history and look for patterns in my winning and losing trades. More often than not, I will find recurring mistakes and bad habits. For example, when I found out that I tend to hold positions from profit to loss because of the fear of missing out, I started setting tighter trailing stop losses for all my trades. In addition, through reflecting on my past trades, I realized that I tend to give back to the market once my trade start to hit 20% profitability. So with that in mind, I started taking trades that are more short-term, aiming at take profit levels of around 15 to 20% instead of always gunning for the big moves. With all said and done, what works for a trader might not work for another. For me personally, I want to get as much exposure to the tools and methodology out there before selecting the ones that works best for me. I tend not to do so well when leveraging trades, so for now I will omit it from my trading and focus on the things that work best for me, such as using oscillators to find divergences and candlestick patterns. Since those have worked for me up till now, that will be what I'll be talking more about on this channel. Trading can be very challenging and discouraging at times, especially in the beginning. And unlike school or sports, newbie and veteran traders alike are thrown onto the same market regardless of differences in experience, skill, and capital. No one can always win, but with hard work, your performance will improve. In the past, I struggled with cutting losses because I do not like the feeling of losing. But by implementing what I read and learned on the subject, I was able to get through my ego and psychological roadblocks. Now, I have made other videos on the different indicators that you can use during trading, such as the explain under a minute videos for those of you who are time poor or find it unbearable to sit through an entire lecture talking about moving averages. The videos in my channel will give you a framework of how the technical indicators are applied. Therefore, you can watch them and pick those that work best for you. I will upload other practical videos soon for those part-time traders who want to grow their small account. So if you want to learn more about trading, then click the subscribe button and the notification bell. I promise there will not be any marketing BS. If you enjoyed the video, then make sure you hit the like button. Thank you guys for watching. This is Bull Compass, and I'll see you guys next week.